Good morning, good afternoon, or good evening. Welcome to today's silver analysis. It's currently running on about 9:15 in the morning, and silver is $40.14. What's occurred now is that it has managed to come up towards this trend line, which is the 18-day average of highs, which is showing more of this market really consolidating that through time. This Fibonacci that is used is automated. What it does is it finds the last 67 periods, finds the highest level, finds the lowest level, and then it works within there. And because of the automation, it's now getting to the point where the highs are going to be reducing. Therefore, this line is going to go back lower, and this one will as well. That will not change this major level of $38 and penny change above it. 38.10, anywhere in that area. And that's the area that it needs to hold and stay above for this market to get out of the bearish sentiment and move towards at least going neutral into that of bullish. It's looking now as if it's trying to go neutral, but it's only been a few days. Overall, it's been 3, 4, 5, about 9, 10 days above this significant mark. Now, I've also mentioned that we pretty much had an appointment, still can, to touch this significant level, or $42 and low change, 42.15, somewhere in that level, because of a confirmation of holding well above this level for a decent amount of time. So I think what's best to point out is that if it doesn't get up there, there's a lot of caution to be stated for not doing what it's supposed to, which is make a run up to 42 and then adjust the message of the market from that point on. Now, if we switch this up to the more longer term time frame, what I found very interesting was that somewhere in around here, I showed the chart yesterday. It's the reply to Brother John F's Weekend at Bernie's regarding when the COMEX inventories took a huge dive. Well, it happened roughly around here, right before the market decided to take its little plunge, if you will. And the Fibonacci that I was talking about, which is the 3811, somewhere in there, the next one is up above here. So what's happened is the confirmation of a break above here means that we're going to test this line in or around that area. We are not, and we have not been in or around at this point. Therefore, we can take a look at this and state, well, we got these higher lows in place, so therefore the market is still bullish. And yes, that's the case, and it doesn't even have to go up to this level now for it can still manage to even come back down and then boom, start to go higher and still successfully make the pattern come into play. Moving on now to the comparison from 1979 to the current one. The significant thing is the market had a consolidation period after this move at the exact same time as it did now. And then you see here, boom, big lift off, and then market's going higher. What do we see here? Boom, miniature lift off, miniature correction. Now, the reason why it's ended at this point is the market on the 1979 time frame would be going really parabolic here. So therefore, for this to continue going, it really has no choice but to really start to make a move towards the upside. But it does show anyway that you could have moves as we did in here, go up about 200%, consolidate for really the same amount of time, and then make massive moves. Therefore, we've had the big gains, we've had the big consolidation. I think the best thing, at least in my point of view, is that on a technical level, there is no way that the market will be up too much or it'll be way overextended or overbought, all that type of stuff, if and only if the market continues to escalate high, not only to the $50 levels, but even 60, 70 towards new highs. We'll conclude this within the more shorter term or the 6-hour chart, and it looks like day 6 within this 5-day moving average test. The test is either going to fail or it's going to pass. There is no other choice it can do other than keep on testing it forever. That's about 1 trillion in one shot. It will not happen. That means it just stays within the 5-day moving average for the next 10, 20, 30 years. No. However, it either has to break down below the level. Right now we can see, oh, it looks like it's breaking down. Yeah, it does, doesn't it? Sort of like it did here and down in here. And what happened after that? And well, then it looks like, oh, we're breaking out. And well, it had a decent move up, but no. It hasn't had a clear breakout above or below the level. What needs to happen for that breakout or breakdown is it needs to first get above the band, then or below. Then when it makes a move from one move to the other, it needs to do it again, meaning, okay, we get barely above it. Now let's start an uptrend with some sort of direction like this. Okay, or we go below. Now let's start some sort of downtrend with some direction like this. That's what ultimately would be needing to happen for that to be the case. Okay. I said yesterday that I thought it was like just a terrible video. A lot of it because I was stuttering, yada, 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 but the information's good. And I think I had the same sort of thing. So, it's an average video. It was good. It gets the job done, but at the same point, it's been a very slow process and getting things going. But I think it's a positive, though. And it's a huge positive because it allows many people still wondering, still making many decisions, or hopefully doing a lot of research and trying to beat the clock. And because it's taken a while, that allows them to beat the clock.